In 2019, one company was valued at $47 billion. The founder was called a visionary. And 8 months later, the whole thing nearly collapsed. The business didn't change overnight. The numbers were always there. The problem was the person running it. I've spent 50 years watching companies. And I'll tell you, the hardest thing to measure isn't revenue or margins. It's the quality of the people in charge. Buffett built his fortune backing great operators and walking away from brilliant businesses run by people he didn't trust. So today, I'm giving you the 5 questions he uses. By the end, you'll spot a bad CEO before the market does. And the 5th question is the one that exposes almost every fraud before it happens. Here's the first question. Does management have real skin in the game? When a CEO owns a big chunk of stock, every bad decision costs them personally. Their incentives line up with yours. When they own almost nothing, they're playing with your money, not theirs. Think about Warren Buffett. He keeps almost his entire net worth inside Berkshire Hathaway. He eats his own cooking. But ownership alone isn't enough. Because the next question reveals what they actually do with your cash. This is capital allocation. And it's the single most important job a CEO has. Let me tell you about a man most people have never heard of. Henry Singleton. He ran a company called Teledyne. When Teledyne stock was cheap, Singleton did something brilliant. He bought back roughly 90% of the company's shares between 1972 and 1984. He didn't chase empires. He bought back his own stock when it was undervalued. Charlie Munger called him one of the greatest capital allocators in American business history. That's the standard. A great manager treats company cash like their own. A weak one builds a bigger kingdom to feel important. And how do you tell them apart? You listen to how they talk. Question 3. How honest are they in bad times? Every CEO looks like a genius when sales are climbing. The real test is the annual report after a terrible year. Do they own their mistakes? Or do they blame the weather, the economy, and bad luck? Buffett does something rare in his shareholder letters. He writes down his own mistakes by name. He admitted overpaying for businesses. He called buying the original Berkshire textile mill one of his dumbest decisions. That kind of candor is gold. Because a leader who hides small failures will eventually hide a big one. Which brings us to the dangerous one. Question 4. Does what they say line up with what the company actually does? This is where WeWork comes back. The founder, Adam Neumann, sold a beautiful story. A community. A movement. A company that would change the world. But when investors finally read the filing in August of 2019, the numbers told a different story. Massive losses. Strange related party deals. The founder leasing buildings to his own company. Within weeks the IPO was withdrawn and Neumann was pushed out. The story was dazzling. The numbers were not. Always trust the numbers. And that leads to the final question. The one that catches the rest. Question 5. Do they respect the people who own the smallest piece? Watch how management is paid. Are they getting enormous bonuses while the stock falls? Are they diluting your shares year after year by printing new stock for themselves? Buffett once said the 3 things to look for in a person are intelligence, energy, and integrity. And if they don't have the first, the other 2 will kill you. He meant integrity first. A manager who quietly enriches themselves at your expense will never build wealth for you. No matter how clever they are. So here's the one idea to carry with you. You're not just buying a business. You're handing your money to a stranger and trusting them to grow it. Ownership. Capital allocation. Honesty. Words matching numbers. And respect for you. 5 questions. Ask them every single time. Great numbers in the wrong hands won't stay great for long. Now I'm curious. Which CEO do you trust most with your money right now, and why? Tell me in the comments. I read every one. And remember, this is educational content, not financial advice. Always do your own research before you invest a dollar. If this changed how you'll judge a company, hit subscribe. Tomorrow, we're breaking down how to read a balance sheet in under 10 minutes. I'll see you then.